Hi everyone, welcome back to VinodSrinivasan. I'm recording from Rupesh's desk. Yes, Anand is busy recording because we had a lot of meetings in the morning. Unfortunately, the recordings got delayed for the day, so I'm unable to record from the studio. So the video quality might be a little patchy, the audio quality might not be up to the mark. For that, I apologize on the start of the video. I am trying to get accustomed to looking at the camera, though I'm looking at the screen. My eye seems to be tracking the screen rather than the camera. So I'll try my best to look at the camera like this, but I might end up looking like this. So if I look a little cross-eyed and wonky, I'm sorry for that too. Anyway, what did I want to talk about today? What did I want to talk about today was the Fed not doing anything, just sitting still was the news. There was a lot of expectation that the Fed might be cutting interest rate, so the markets were waiting to explode after that. But then our friend Mr. Pal got onto the stage and he said, inflation is where it is, but he's more worried about what Trump might do because he says the tariff is not something he's worried about as of now. He says the inflationary spike from tariffs may not be very bad. If it is, it will be very short. But he still says there's a lot of uncertainty. Based on all that uncertainty, right now I'm not cutting the rates. But the market feels that in the future, as time goes on, that this year we may expect 2 rate cuts at least. This all sounds like a bit muddled to me, to be very honest, but the markets reacted positively and the Dow went up, the S&P went up, and there we are right now. The Indian market seems to be moving and correcting in the opposite direction too. We did have severe downtrend for the last week or 10 days, but now we've been seeing some positive movement in the market. So a lot of you are asking me this, and a lot of analysts are on TV saying the worst is behind us, that we're going to slowly see some recovery. I don't think so. This is what my brother has also been saying, that the recovery, whatever we have, will be very short-lived, and maybe this week we will have some recovery, meaning we might see some positive action in the market. But following next week and onwards, we may see a downward trend again. Of course, I'm not a soothsayer, I'm not an astrologer, these things are not set in stone. No one could have predicted Trump would come back to power and all this would be happening a year ago, but here we are. Same way, I cannot say what will happen for the rest of the year or even rest of the week, but what is important is to keep investing no matter what happens in the market. And the stocks we have always been considering are still in consideration. Some of these stocks were in consideration before this bear market push came in September, and some of them have got into better consideration ranges now. So that is where I would say your eye and mind should focus on. Yes, interest rate cycles are important, macroeconomic news are important, but whenever we see opportunity in the market, we should take notice of those opportunities and keep investing. Like today, I was looking at NATCO, which is still at great price points for me personally. I was looking at IndusInd Bank. It is a great price point for me personally. And I am happy it is there where it is, because whenever I do have change on my pocket, Tiffin Coffee money that is, these opportunities are still present. A lot of you are asking me, when will NATCO go back to where it was? I really don't want it to go back in any rush. Some of you even asked me about that about IndusInd, saying when will IndusInd go back to 1000? I am happy that it is where it is, because it gives me more opportunity to slowly to build my portfolio and consolidate my positions, because I do not have a lot of capital or a large amount of sum of money to drop at a single go in the market. I'm like all of you. I'm investing in small bits and pieces, and I'm trying to move along. What is curious is, one of you had messaged me on Instagram saying, Vinod, I've been investing around 10,000 rupees a month, but since you've been saying 2,000 rupees a day, should I extend myself and push myself and do like what you're doing? Please do not imitate anyone else. You have to invest in ways which are right for you. If one of your friends is able to invest at 2,000 rupees a day, good for him. Or if one of your friends is only able to invest 2,000 rupees a month, good for him. The point is, you have to do what is right for you. And what is Tiffin Coffee range varies from person to person, because your budgets vary person to person. When we talk about Tiffin Coffee range, the main point where we're trying to drive over and over again is, it is a kind of money which, if it becomes zero, you will not feel terrible about it. That is you're spending on a daily basis. So for me, if I went and had 2,000 rupees for lunch somewhere for the day, or I spend 2,000 rupees for breakfast or 2,000, it won't really bother me. I won't go thinking about it saying I spent 2,000 rupees for a meal today. That's the way I look at it. And that is the attitude you should have when it comes to investing in the market at these points. Like I said yesterday, I was aggressively looking at gold and I spent my entire day's pocket money on gold. And the reason was I wanted to consolidate some gold. Because when I was looking at my portfolio, I wanted to have at least 5% or more in gold. And I noticed lately I've not bought much of gold. And because I've been busy chomping and eating other things, my percentage of gold has started sliding downwards. So I took that opportunity to buy gold. Same way today the markets have opened positive. Lots of the stocks we're looking at are on the green. But that doesn't mean you do not invest. A lot of you are immediately thinking, okay, today is a day I'll go on a diet because the market seems to be going green. The FIs are still selling. And I read an article recently in Business Standard that it had come out that the FIs have been selling in India in slow, steady decline since 2015. We are seeing the big declines recently, but the FIs have really stopped putting huge chunks of money in comparison to what they're selling. Since 2015, it's been downward. 2004 or so is where the data tracks from. From there, it was going downwards for a while. Then suddenly from 2007-8, it started going uptrend where they were investing more and more. Then since 2015, they've been slowly and steadily pulling money out of the Indian market. And recently, of course, you've been seeing with me, they've been pulling out in large chunks. So this thing of the FIIs pulling money out of the market has been going on for some time. So my suggestion would be not to focus on these FII data, these DII data. If anything, when they do decide to sell or they do decide to wait to buy like the DIIs, it only gives us time to actually, small retail investors like you and me, gives us opportunity to slowly consolidate our positions. Because you and me cannot go and buy 1,000 shares of IndusInd Bank. We cannot buy 1,000 shares of NATCO at a single spot. We have to do this over a period of months and weeks. So as long as the price is depressed and the Mr. Market decides to hand out a meal to us, we should be ready to take it and be courageous. Most of us are driven by fear. Either when the markets are going up, we are in the fear of missing out. When the markets are correcting like they are, we are in the fear of saying, oh my God, am I doing the wrong thing? Should I avoid this? Is there something wrong? And that is a problem. What you need to do is conquer your fear. And the only way to conquer fear is through knowledge. And what is knowledge? Is reading and understanding and digesting information. When I say reading and understanding, it needs to go hand in hand. Because a lot of us read many things, but we don't understand them. So you have to spend equal amount of time not only reading, but understanding it. That is what digesting knowledge is. So whatever you read, you digest it, and that becomes the knowledge for you to dispel your fear and move forward. I can only motivate you. I can sit on the sidelines and cheer you on. End of the day, you must do the work. If you want to make progress, it is you who must do the work. I cannot do it for you. Though I wish I could. I wish I could come and give you the confidence you need. But I can't. You have to lift the weights. You have to control your food intake. You have to do the dieting if you want to see the results. All of us want to see the results but don't want to do the work. And that's not how investing works. Especially investing in equity markets. Because without understanding what you're doing, you will be consumed by so much of fear, it will be paralyzing. Even if it is a bear market, you'll be paralyzed. Even if it's a bull market, you'll be paralyzed. So keep all this in what I'm saying in mind. And when you see these opportunities in the market, like you're seeing what I said, when I saw NATCO today, I saw IndusInd today, we are looking at long-term horizons here. We are looking at periods of 10 years, 15 years plus. We're not looking at something for the next 2 years or 3 years or even 5 years. One of you had also said, should I be buying small amounts of stocks or invest in gold in small bits and pieces? And like what Anand says, it reaches 1 lakh, sell it and buy bonds. That is a good strategy to have. That is another very profoundly smart strategy to do too. You don't have to buy equity straight off. You can buy gold, consolidate, and then buy a bond, take the interest from the bond, and then invest in equity. That way you preserve the capital, whatever you're investing, and whatever extra which you're earning is what is being invested. that is a good sound strategy to have. Only thing is, if you're young like Dana is, or young like Rupesh, or my friend Valluvar behind the camera there is, I would suggest you can look at shares right now itself instead of looking at bonds. Bonds, I would say, as you are getting more averse to risk, or your life commitment starts catching up with you, let's say you're getting married and you have plans which need to come to fruition soon, then maybe you need to put more bonds. But in this current market which we are in, this kind of corrected market we are in, there are more opportunities in equity than in debt, is what I would feel. This is, of course, my humble personal opinion. It is not something that you need to follow. What I would like you to take from this is say, Vinod said something interesting. Let me think about this. Let me study this. Let me put some thought behind this and say, where am I? What should I do? What do I need to do? That is what I would feel most happy if I hear from you guys, that you're feeling inspired to spend time thinking, reading, and learning. Anyway, that kind of rounds up the day for me. I've told you what's happened with the Fed, and that we're going to see some positive movement overall in the broader market for the next few days, probably till the end of this week. You're not going to see any major corrections unless something huge happens in the news, and that's possible. As of now, this will be where the week will probably end, till next week where we get more clarity. As we get closer and closer to April, we'll have more clarity on these tariff negotiations which are happening in the US, because 2nd April, some more tariffs are going into effect. What happens by then is what we have to wait and watch. Based on that, we will see. As I was saying in the beginning, gold is in a great position because of all this uncertainty. And those of you who have been buying gold since last year, you'll see great returns like I shared on Instagram. 20% or more you'll be seeing from your positions of last year to now. So gold will have this forward movement as long as the uncertainty is there. A lot of you who missed out on last year's gold are asking me, when will this gold correction happen? It is very possible for gold correction to happen as soon as the market loses uncertainty. If market loses fear, gold could correct. How much it will correct, it's very difficult to say and predict. When, it's very difficult to say and predict. That's why I would not say put too much money. Put as much money on gold as you feel to averse risk. But if you're willing to be a little brave, stay in the equity market and keep investing. Thanks for watching the video. I hope you had a wonderful day today. Tomorrow I'll be back in the studio recording from my table, and the sound and video quality will be much improved there. Again, I apologize for the audio quality and the video if it wasn't up to spec, but we couldn't do what we did our best with what we had. Thank you for watching VinodSrinivasan today. See you again tomorrow with some more news. Bye.